breaking news for your home. Way-Day. Wayfair's big sale is almost here, and you can score the best deals in home. Like up to 80% off everything home. Yes, you heard that right. 80% off with free shipping on everything. Plus surprise flash deals all Way-Day long. We're talking outdoor furniture and essentials, rugs, and more. All at Wayfair, and all up to 80% off during Way-Day. Shop Wayfair's Way-Day from April 25th through 27th.
Wayfair, every style, every home.
Yep, and we're live. How you doing? This is Coach Ernie, and this is 0 Days to Expiration, previously called the War Room. No longer war. War is over. Anyway, today we're going to expose a myth about volume profile. Then I'm going to show you how to use volume profile to extract profit, because that's why you're here. Why else would you be trading but to get profit? And I'm going to show you how important volume profile is to your trading. Now, whether it's our method of 0 DTE or any method for that matter, options, futures, stocks, it doesn't matter. Indexes is a particularly sticky wicket, and that's because indexes themselves have no volume, so you cannot see the volume profile. However, you can use the futures. So for instance, the SPX, which is the index for the S&P 500, has an equivalent futures product called the E-mini S&P futures contract. And it's the same thing. It's looking at the exact same market, the S&P 500. The difference is that the SPX is a calculated value. It has no volume, yet the ES is not calculated. It has volume because it's a real thing. People trade it. So when we're looking at volume profile, we're actually looking at the ES. Now, one point of confusion that I want to make before we go into this any further is that we're going to be using the ES to determine when our tradable event is, and you'll see what I'm talking about a little later. And then we're going to place the trade on the SPX. Now, you may wonder, how do I do the translation? Because the price always seems different. It doesn't matter, because it's not about where. It's more about when. All right? I want you to internalize that. It's not about where, it's about when. And the specification of our trade will already know the width, we'll know the direction, whether it's a call or a put, and we'll know the risk to reward, so we know how much we have to pay for it. All that information will tell you where. You simply plug those things, push the fly where it satisfies those, and it will give you the where. And that's it. So you don't have to know the where. You only have to know the when. And then that's what this presentation will be all about. But first, we have to dash some myths about volume profile so that you understand, first of all, where those myths came from, although I might not go into that in great detail, but I'll give you a hint, and what we're actually looking for, what actually makes money. Speaking of making money, if you're interested in this podcast, this live stream, give it a thumbs up, subscribe down below, and if you want to learn more about 0 DTE trading, we are the premier 0 DTE trading, the original on the internet, been here forever. Go down below, give our service a try. It's in the link. Go to Fly on the Wall, where you'll get access to the most incredible options analytical platform specifically designed for 0 DTE, and a Discord where we have hundreds of traders that are talking 0 DTE every day. And I was going to show just yesterday's results, because every day they like this new channel I created where they can put their trades up there, and it's really incredible. So anyways, I'm getting off track. We're here to learn why POC, or point of control, is a lie. And I have a presentation like I had yesterday. That's going to be the new thing. I'm going to do a presentation every day, or try to. And let's get to it. No? See, that's the tool. See, isn't that an incredible tool? But that's not it. We have to go to PowerPoint. There we go. POC, point of control on volume profile, is a lie. First of all, what is the point of control? The point of control when you're looking at a profile, a volume profile, and perhaps we can bring one up here and demonstrate this. The TradingView. Okay. So here's a volume profile, a very complex one, but you'll see that there is one very large node, or the biggest node, and that is this one right here. So in volume profile parlance, this would be the point of control. Now, often people look at a session profile, so they're way down in the weeds looking at an individual, and you can see clearly now which one is the profile or the point of control, and that would be this one. It's the one with the biggest amount of volume. All right. Now, that point of control is at 68.56, and when I was in the daily chart, the biggest profile was right here, and that one's at 62.26. What's going on there? Why aren't they the same? Why is the profile different, the POC? Oh my God. How can I possibly use the POC if it's never in the same place? He says knowingly. All right, so let's go back to our presentation and we'll continue why POC is POS. All right, let's see. Yeah, we got to go back to PowerPoint. Sorry about this. Little delay. There we go. And I got to get it up on my side so I can see it as well. Yeah, the POC is a lie. Reading structure the right way. That's what we're ultimately here for. And what I just showed you was, depending on the view, you're going to get a different POC for every view. Whether you're looking at a session profile or 2 sessions or an hour or days, it's always going to be different. So how can you possibly use the POC when it's essentially arbitrary? Now, some people will say, we just use the session profile. Au contraire, my friend. Listen up, bucko. Session profile is not how you're going to make money off a volume profile. Session profile is incomplete information. Go back to some of our previous videos on volume profile where I debunk that as well. And let's just say that you need all the volume, all of it. Volume profile is super important here, and you got to do it right. That's the whole point of this, is to show you need to throw away these ideas that session profiles or volume or value area high or low, which is another arbitrary thing, or point of control, has anything to do with your success. As a matter of fact, if you follow what other people are saying, it is guaranteed to make you a loser. Guaranteed. Because you're going to be looking at the wrong thing. So don't listen to POC. Don't listen to these volume profile wannabes out there. Listen to the guy who's been doing this professionally as an institutional trader, hedge fund manager, and been studying it under some of the greats, the originals, the people. I know what I'm talking about. All right. Let's continue on now that we've debunked that thoroughly. It is arbitrary, as you can see. But volume profile is the map, but POC isn't the point. I like that. Structure is real. Inflection is the opportunity. What am I saying there? I'm saying that the structural elements, the levels that you can discover on the profile, that's where the real opportunity lies. And that's what you're going to see in just a little bit. Now, there are a lot of different inflection levels. There are, and we'll see this very shortly, but let's just say that it's not in the node, it's not the POC, it's not the middle of the node at all. In fact, it's very different. And here's the third point, markets remember. Now, this is a point that is driven home by a great mathematician named Benoit Mandelbrot, who came up with a theorem of system memory, which was originally looking at water basins, but then he took the idea to Wall Street and showed institutional traders that markets also have memory, just like natural systems have memory. And the volume profile is a catalog of that memory. It is the physical embodiment of the memory of the market. That's why volume profile is so important. Next slide. So every day we go through a routine, and we haven't started that routine yet, but our routine involves 3 different things to figure out what we're going to trade and when and where we're going to trade it and when we're going to trade it. What, where, when. And the first thing that we need to do is figure out the fly width. And we do that by going to our trusty VIX playbook. on TradingView. And we just need to go to the VIX here. And you'll see our classic out of the money fly, butterfly with guide range. And it tells us how wide we're going to trade our flies. And if you want to know why we choose these different widths, go back to a previous session where we talk about the fly widths and why we choose that, how we use the VIX, and how volatility affects the rate of premium decay, and then why that compels us to either go wide in high volatility or narrow in low volatility. So every morning we choose a width. Now, volatility right now is on the lower end of Goldilocks, these three regimes. So we're at about 30 wide. So between 30 and 30, right around there. So we're going to be using a 30 wide butterfly today. So we got that in our bag. Then the next step, I could use keyboard controls here, but I'm fumbling a little bit. So just bear with me, is your directional bias. We need to know whether we're going to trade above or below the market. So that means we need some sort of trend following, and I talked about that in a previous episode. Notice how I just keep on referring back to a previous episode, because these episodes are like a playbook for yourself. Every single one of these is absolutely instructional, telling you everything that you need to be a successful trader. More than a successful trader, someone who is consistently profitable, independent, and trade at a pro level. That's where we're leading you on here. We're going to make you a pro trader here. Just keep on watching these videos. And if you have questions, please put them in the comment section. And if you like this video content, please give it a thumbs up right now. Go over there, give it a thumbs up. That will make me happy. It will make you happy. It'll make you a better person. All right, let's see. When a POC and in a high of value area are moving up, it's a sign of additional buy to open. No, it's not. You cannot tell when price is going up or down based on the volume profile. I'm sorry. That's just not true. POC alone is one price level. It is better to check the development of the value area. No, it's not. It's the history of and it's not the value area. Value area is another area. See, this is the bullshit I have to deal with. I'm sorry, I don't mean to come down on you, but what you're saying is pure crap. It's myth. This is not how you evaluate volume profile. Hey, look, I'm the coach. I'm here to tell you how it is. So listen to me. I will show you what to pay attention to. But what you have right now is going to lead you down the wrong path. Good morning, guys. Anyways, back to this. We now know our width. I just had to address the comments, and I'm sorry if I yelled at you, but look, a coach every once in a while has to set the student right, slap them upside the head so they understand the path they're going down is going to lead them to destruction. All right. And volume profile is used in a very specific way. Now, I'm telling you as a former institutional trader that would regularly put on trades with notional values in the hundreds of millions of dollars, that volume profile was our lifeblood. And I'm telling you how to use it. All right, another question. When viewing volume profile on the fly tool, where does it get in the data? Does it use one day chart from TradingView? No, I actually construct the volume profile on fly on the wall from more than 5 years of data. So you're always looking at the maximum amount of volume, which is another key to volume profile. All right. Let's get back to the presentation. So we're looking for three things: fly width, directional bias. Right now the trend is positive, so we're going to be doing call flies, and a tradable event. That's why we're here, to learn about where the tradable event is. And that's on the volume profile inflection levels. All right, next slide. So when we're talking about the trend, we trade with the trend. When is that tradable event? Everybody that knows that when you're trading with the trend, you trade when the pullbacks happen. And so here's a bullish trend, and you can clearly see price goes up, comes down, goes up, comes down. It pulls back and then continues the trend. These areas right here where it's pulling back, those are the tradable areas. Now this is where volume profile comes in, where you probably did not know. But it almost invariably will pull back into structure that you can identify on the volume profile. That's the key. That is your tradable event right there. And I've shown it many times on here. And I'll show you again and over. But that is the tradable event. And we'll look at trades later on, maybe next episode. So trends pull back. That is the tradable event. They pull back somewhere. That somewhere is your level. Transitions, not points. Here I'm telling you why is that tradable level. Why is it a tradable level? Why are those structures the tradable level? That's because that is where traders are committing their plays. Now, you got to keep in mind that it's not just one or two traders. We're talking about millions of participants here that are all fighting. They all have their own ideas, but it's an auction process, and they come to some kind of resolution where value is and where it isn't. And the level in between where it is and isn't is very well defined by those nodes and crevices. So that's why you have to pay attention to it. And it doesn't just happen that day. It is repeated time after time. From that day, that last hour, that last day, the last week, the last month, the last year, the last decade. That is how powerful volume profile is. Something that happened a decade will rear its ugly head today and give you real-time intuition, speculation, whatever you want to call it. I call it solid levels where I can build my scenarios. Now, I don't know exactly what level it's going to hit, but I do know it's going to hit a level, and I can be prepared for whatever happens. But the fact that I know is the key. All right, next slide. All right, so we're getting into what are these levels. Those levels are the edges and the deep crevices of nodes and what I call value nodes. And some people call these high value nodes and low value nodes. I don't know why they call the lack of volume a low value node, because it's not really a node, is it? It's like an antinode, the absence of a node. So I call it a crevice or volume. Those are more descriptive. In any event, the crevice is these deep areas where there's very little trading. Those are super significant. They provide support and resistance levels. You have to mark them up. And the edges of the node themselves. Sometimes it's hard to see the exact edge of a node, and it's easier if you elongate it. Like I do on TradingView, you'll see that I elongate it to almost 95% of the width of the chart, so that I can see very easily exactly where that node is, or within 2 or 3 points. This one's a little bit compressed, but even here you can see very definitive levels here. That is where the battle's going to happen, between where they find value and where they don't find value. Super important. Now, what I had said before, I call them edges, the rims. You want to call it a rim. I don't know why I stuck on that word here, but let's just call it the edge. The memory, that's another very important point that I'll bring up again. Super important, and this is what gives us our power. The market has memory. And when I say the market, the collective intelligence of those millions of people have memory, and it coagulates in the same place all the time. That's the cool part, right? For that point alone, you should be giving me a thumbs up. That is going to make you a successful trader, knowing that one piece of information. Markets have memory, and that produces levels that you can use in real time. In other words, I already know before the market even opens where the likely levels are that price is going to bounce off of. Think about that. Really, that deserves 5 thumbs up and a subscription and joining our service down below. I'm sorry. Okay, let's go on to the next slide. Here I'm really just explaining why. Dealers, market makers, institutions, they're all looking at these levels. In fact, currency traders, that's all they look at is levels. There's nothing else that matters. You think that it's probably technical analysis or fib. There are some people that use fibs, but quite frankly, everything resolves down to a level. And that is the key. Some people will look, and particularly currency, because it doesn't really keep on going up and up like an index does. It just keeps on reverberating over and over the same area. And then those levels, they persist over decades. And people will literally make a career off of specific levels that they're familiar with. And that's how they talk. They talk about those levels. All right. So price, it bounces off of those levels, those edges. Now, Not always. The market is random to some extent. It's random with patterns. Sometimes it will almost always hesitate there. So if you're watching close-in action, you'll see it hesitate at all levels. Sometimes it bounces off it. Sometimes it pauses there and then breaks through. The other thing that you'll start to recognize is that inside of a node, there's much heavier liquidity. And so you're going to see a lot more liquidity friction inside of a node. And that's because for whatever reason, the market has found more value inside of that node. That's what makes the node. Than in those deep volume wells where there is no trading. For whatever reason, the market collectively has decided that the value isn't there. So they have to move fast through those areas. But those deep crevices are like waypoints in that trip across the river. So they have to move fast. So that's where trending happens, is in those deep wells, and then consolidation happens in the node where they find value. It should seem obvious. It makes perfect sense when you think about it. But that is actually what is happening. So how do you know whether or not a level is going to provide support or resistance? You don't know right off the bat. You don't know for sure. It really depends on the energies that are in the market. But there are a lot of things that you can see internally and also through some level of analysis that will tell you, particularly when you're looking at things that are showing you what the dealers and the operators are actually doing. Looking at gamma exposure, for instance, will help you determine whether there's an expansion zone on one side of a level and a compression zone on the other. In other words, if things are going to move slow or fast when it flips a particular zone. And so you can be looking for those areas. Now, that won't tell you whether it's actually going to go through, but it will tell you how price will behave when it does get on one side or the other of these inflection points. You can think of your GEX as like a swarm of bees that are over the honeycomb. They're swarming around. You can't really see what's going on underneath. And then when they leave, there are all these structures that are left behind. That's like what GEX is. That's the swarm of all the traders and their open interests working on the market. And then what they leave behind is the volume profile. All right. Next slide. We're almost through these slides. We're getting through them pretty quick. Now, as I said, all the volume is necessary because it has that memory. This is such an important point. If you're dealing with session profiles, you're missing 99% of the action. The session, today's session, yesterday's session, are not going to necessarily tell you where price is going to find an inflection point. Now, it may tell you because it's dealing with, that activity is dealing with the larger profile and larger structure. But it might not, because each day is more noise than it is signal. So looking at an individual day's profile is not going to give you definitive evidence on where these inflection levels are. The more structured way, the more sure way is to look at the entire history within the range that you're trading. And that's why it's so important when you put a volume profile on that you try to achieve the finest granularity that you possibly can. And I've shown this in previous videos that we look at it and we try to get 1,000 lines or 2,000 lines or one tick per, or one row per tick or one volume bar per tick. Anything that will give us the finest resolution possible. That's where you're at. There's another very important point that also deserves a thumbs up. Come on, let's see those thumbs up. Where are you guys? Now, the color coding. We do all of our analysis at on the day chart, right? And the reason why we do that is, again, so we can get the full picture. But when I zoom into a tradable area so I can see the hours of the day, that might be a 5-minute chart, I can no longer really rely on the volume profile because now I'm only seeing the profile for the visible range. I'm not seeing the full picture. So at that point, after I've marked it up, I can close the volume profile. And now I'm left with all these lines. Now I have a color coding system that helps me identify where those lines are, whether they are in between nodes or the bottom of a node or the top of a node. And again, go back and look at that. We'll talk about that in great detail. But I color code them so that I know exactly where I'm at. And I'll show you an example of that right now. TradingView. Yes. Turn that off. All right, and you see the colored coded lines up here. So now this is a day chart here. And the other thing is I made it squatty so I could do something, but normally I have it at about 95%. And then when I zoom into the day level, like a 5-minute chart, so now I can actually see the lines. So here on this right here, the green and the red line, I can tell you that there's a node, a historic node right there, even though there is this big node right here. And you're thinking, heck, why am I not looking at that right there? That's because that's noise in the day parlance. There's the nodes. Here's the levels that I did. In fact, I typically will turn off the profile here. The other thing is I should turn on the chart so you can see those as well. So there's the chart. You can see how it interacts with the nodes, the levels here. All right. And today's market is over here. Wow, we are just cruising, man. Let's mark up the sessions like we do every morning. I'm typically taking a trade in the morning session, which is 9:30 to 12:30, and then bringing it into later in the day. There are some strategies where we're looking at the afternoon or closing strategy as well, but our primary trade is taking it in the morning. All right, there we are. Yeah, looks like we have an impulsive move up. All right, back to the presentation. Are there more questions here? Yeah. If I can make more accounts, I will like more. This is high level knowledge. Yes. Didn't find any info about your hedge fund background. Okay. So, you know how many hedge funds there are? My hedge fund was a private investor fund. All right. And so that's why you didn't see it. All right. Let's go on here. I got to go back to volume profile. Let's see there. All right. Oh, I know. I wasn't showing you what I was seeing. So here are the lines. You can see the green and the red lines and the yellow lines. And then there are blue lines. Those are crevices inside of nodes. Yellow lines are crevices in between nodes. Red lines are the top of a node. Green lines are the bottom of a node. So without having the daily profile, I can tell exactly where those lines are. All right, now back to the presentation. All right, I'm on slide 10. All right. No, I'm not on slide 10. I'm on this slide. Next slide. What I'm saying here is that on our fly on the wall application, we have volume profile built in. And we're still developing the application. It's under constant development. Some of the new features that we're putting on, just so you know, and maybe I'll show you just to give you a taste of it. I'm going to show you my development platform. But let's see. There we go. So this is my development platform. The production platform looks similar, but this will show you some of the more recent stuff. On the left-hand side, we have a live heat map, a convexity heat map, showing you the entire options chain and allowing you to select trades very quickly just by clicking on a tile, and it brings it up, and then you can place the tile in there. Anyways, here's a strategy in place here. We can do all kinds of things. I can play what-if analysis. I can change the volatility to see how that affects it and so forth. But I can do way more than that. I can look at this from a 3D point of view, and I can see exactly what it's going to look like in not only the P&L, the risk view, but I can also look at it from a time point of view. So time is the z-axis going in. So I can zoom in and see where it's going to be like. And you can see here, that green line is the decay curve. That's where positive P&L meets negative P&L. All right, isn't that cool? And I can look at this from different points of view. I can see what it's going to look like at the end of the day. So on the right-hand side is the end of the day. On the left-hand side is today. And there's those familiar colors that you saw. The magenta line, that's this right here. See? And then the cyan line over here, that's the at expiration. You can see it right there. This is a super advanced tool. Nobody else has this. This should deserve a thumbs up too. Everything about this is a thumbs up. All right. let's go back to the presentation. By the way, when you become an observer member, you get full access to this tool. And like I said, it's under constant development. It is going to be eventually your sidecar to your favorite brokerage, allowing you to enter trades and analyze them right from this tool into your brokerage account. Currently, we're working on a sim trader, so you can do it sim trading as well with realistic fills, by the way. And then, of course, there's the Discord, which I haven't shown, but I am getting away from the presentation. Oh, I am not even showing the tool, am I? Oh, I went back to the presentation. Let's see. I can do a short interlude to the Discord. See, here's our Discord with lots of people in here putting information in there. People recording their trades. And if you look closely, you'll see there's lots of very profitable trades in there. And there we go. Let's go back to the presentation. And so what I'm saying is that the fly on the wall tool is built specifically for options traders, and particularly for those that are doing 0 DTE, looking for convex, high asymmetric trades. That means very tiny risk, large potential profit. Those are the trades that we're looking for, and this platform is tuned exactly for that. It's tuned for pro trading. I guess that's the better way to say it. All right, and we are right here. So this is what we did earlier today. We find the nodes, we mark the edges, or this is what we do on a weekly basis, actually. We find the nodes, mark the edges, spot the crevices. That's when we draw all those lines, and then that's what brings up the memory every day. We can see where price is likely to interact with the market structure. All right. As I said, everything is about the tradable event. When price pulls back into that structure, we already know what we're going to trade. We know it all in advance because we did that prep every morning. We know the width. We know what direction we're going at, directional bias. So we know it's going to be a call or a put, a call above, put below. And all we're waiting for is that event. That event is the interaction with a structural level. And we also know how wide or what the risk to reward that we're going to be putting on. That will give us exactly where that trade is going to go. So if we know that we're paying between 5 and 10% of the width, I'm just looking for flies that are 5 to 10% of the width. But how do I do that? How do I do that easily? Do I go into my Thinkorswim and do I search out different strikes and try to build it? That would take forever. By the time I find a fly, it's going to be gone. The opportunity is going to be gone. That's where fly in the wall comes in. That's exactly what this tool is really about. It allows you to find a trade within seconds and put it on and be done. And know why you put that trade on, because you can find it on our convexity heat map in an instant and see its price relative to all the other prices. And the heat map will show you how that price, that rate of change of that price is happening over time. That's what allows you to see the convexity. So you can find the most opportune trade within seconds, get it analyzed, find what it is, and then send it directly to your Thinkorswim or wherever. So that's the key. That's why fly on the wall will make you way more money than flying blind. All right, so we're right here. I'm visualizing what those trades might look like here, but I think I've described it enough. I will, let's see, somehow I will provide a link to this presentation. I know for sure that I'll be putting this inside of the Discord if you're a member. If you're an observer member, it's a trial for 4 weeks, $17 a week, price of a sandwich. You'll be able to get all the presentations in there, plus all of our previous videos, hundreds and hundreds of videos, courseware, everything. As an observer, it's like you're a full-fledged member of the highest order. And then if you decide you want to stay, then you join one of our monthly programs. But this presentation will be there as well. All right, we're wrapping it up. 6 rules for reading structure. You use all the history. You don't look at POCs because it's bullshit. Can I say that? Oh, damn, I just said it. Edges and centers. Edges and crevices is more what we're looking for. The edges of nodes and the deep crevices. Confirm before entry. So this is something that we'll talk about in great depth in a future episode, maybe tomorrow. We'll show you how to identify that that level and then know whether or not it's going to bounce off of that level, or at least have a high degree of confidence, and then position ourselves in such a way that will maximize our ability to get that asymmetric profit that we're looking for. So that's it. There we are. Wow, I can't believe I did it in under an hour. I was afraid that this would go to 10:15. But there it is, flyonthewall.ai/try. The AI is pretty important. There's also an artificial intelligence decision support system that's built in as well that we call Vexy. And that's still in development, although as a member, I'll be able to get you a ChatGPT version, or you can use it in the Fly on the Wall application as well. And it knows all about the strategy, the process, the methods, and it knows how to coach. So not as well as I do. I'm the coach. All right, here's a question. Isn't there a standard cut and paste most platform support for trades? Sell, blah, 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 providing that would be a quick way to provide functionality. In fact, in our platform, you can pick the trade and then get a script, copy a script, and then paste it right into Thinkorswim. When you say, isn't there a standard cut and paste on most platforms? No, that is not true. There is one on Thinkorswim. Tradier has something similar, but it's not quite the same, and it's not as ubiquitous. But IBKR, or Interactive Broker, does not have one. E-Trade does not have one. Tasty does not have one. So, no, it's not on most platforms, really on one platform. And we support that. I'll show you how we support it. That means I need to go to the platform, Firefox. So the way we select a trade, the way I put this trade on here, is I can do it one of two ways. I can click the create button, or I can come over here and I can find a trade that I'm looking for, right? And I just pick a trade. There it is. Now, this is the create position dialog. And you'll see right here, there's a toss script. And I can just click it, and then I can go to my toss application and then paste it into the order entry panel. So yeah, we support taking these trades, finding them immediately, putting them directly into toss, and then you can get up and running on your toss right away. At some point in the future, you'll be able to use the submit button to submit the trade directly to your toss platform, as well as Tradier and any other platform that I can find the API to connect with. So that's the future. So there's, let's see, I'm going to back to the big head. There we go. All right. Again, if you like this content, please give it a thumbs up. Really appreciate the questions. Thank you very much. And if you want to see more of this stuff, put comments down in the underneath the video. If there are topics that you would like me to cover, I'd be happy to do that as well. Tomorrow I don't know what's on the agenda for tomorrow, but probably something good. Let's see. I have it all scheduled out here. Wednesday, we're going to be talking on, take it or let it cook. So we're going to be talking about whether or not you should be holding that trade or folding. And so we'll get into profit management there tomorrow. So that'll be a great presentation. All right, that's it. I want to thank you all. Take care. Love you. Peace out.